YouTube channel, The Accounting Educator. I'm Safir Ahmed, a senior lecturer in accounting and finance in a UK university. I also work with ACCA as an early career ambassador. This video is relevant if you are studying accounting and finance, whether you are a student of AAT Level 4, drafting and interpreting financial statements, or if you're studying F3 ACCA financial accounting, or if you are an accounting and finance undergraduate university student, or if you're studying MBA finance and as part of your program, you are studying accounting and finance as a module. Now, if you are a student of MSc management and as part of your accounting module, you are studying how to prepare financial statements. Or if you're doing any other master program, the way you are studying the basics of financial statements, how to prepare financial statements for a limited company. So in this video, I will be covering how to prepare a statement of comprehensive income by using a step-by-step approach. I have selected this question from AAT Level 4 Drafting and Interpreting Financial Statements from Osborne Tutor Zone Chapter Activities, and the chapter activity I'm covering is 3.9. So as part of this video, I will be covering one financial statement, which is statement of comprehensive income for a limited company. So if you can take a picture of this question, so then I will be sharing just one screen rather than two screens, because two screens can be little hard as part of one video for you to be able to see everything what I will be doing. So if you can take a picture of this, please. I believe you have taken a picture of this. So I'm scrolling down so you can take the picture of the any further information. So as you can see, the requirement A is you need to draft the statement of profit or loss and other comprehensive income for this company. Okay, so I'm going to take you to the to my Excel sheet where I will be showing you how to prepare a statement of comprehensive income by using this question. So a step-by-step approach I recommend is first you write down the pro forma. Now, if you are a student of AAT Level 4, perhaps you will be given a pro forma, so you would not have to write down the pro forma. However, you will have to select the right or the correct items from drop-down menu. So the very first step I already completed as far as this video is concerned. And then the second step, I will be going through that now, which is dealing with the items that require no adjustment. Now, by using this approach, you will be gaining some credit, some marks for dealing with easy items before you go through any adjustments. Okay, so let's deal with the easy items. If you look into this question, sales revenue is given to us, which is 19,257. So we'll be writing that as it is. Cost of sales, perhaps we will need to do some calculation. So I'm just going to use working one to explain you that, but I want to deal with any other items that does not need any requirement, any adjustment. Okay. So if you look at admin expenses is given to us, distribution cost is given to us as well, but we need to look into if there is any adjustment, if there is any further information in relation to any of those. Now, if you look into further information, there is something which is in relation to admin expenses, allowance for doubtful debt. Allowance for doubtful debt, we will have to make an adjustment in our admin expenses. However, for the distribution cost, there is no adjustment in relation to distribution cost. So the distribution cost will be as it is, which is given to you in the question. So distribution cost is 3567. So I'll be writing that as it is. Finance cost, there is an adjustment in relation to finance cost, so I will explain that to you in a minute. But for tax, there is no adjustment. So this is the tax which is given to you as part of the further information. Corporation tax charge for the year is calculated as 493,000. So 493. And you also need to check if there is anything in relation to the other income. As far as I can see, there is no other income here, but it could be things like profit on sale of non-current asset or profit on disposal of non-current asset. It could be discount received. It could be interest received. But none of that information is given to us. So for this company, we don't have any other income. Now for admin expenses, we will need to do a bit of working there, which is working 2. And finance cost, and we can do this as part of our working 3. So the second step we dealt with, you can see that some easy marks there. And now I will be completing the workings, which is step 3. So first of all, working 1, which is cost of sales. Now we know the way we calculate cost of sales is opening inventories, and we add purchases in it. However, that there is an adjustment in relation to purchases. If you look at one of the bullet point in the further information, where it says credit purchases relating to April 2014 amounting to 264,500 had been entered incorrectly in the accounts in March 2014. Now remember that these purchases were related to next year, which is starting in April. So remember that the year end is 31st of March 2014. So these are the wrong purchases that they have included as part of this financial year. So what we need to do, we need to remove the wrong purchases, and we will be including these purchases in the next year. So here I will say less purchases in the wrong period. And then of course, we will be deducting any closing inventory. And this will give us cost of sales. So opening inventories amount. So remember 3 zeros at the top here. So opening inventories, if you look into the trial balance, this opening inventories is given to you, which says inventories at 1st of April 2013. Okay, so remember that our year end is 31st of March 2014. So which means that 1st of April 2013 was the beginning of the year. So which is 3921. And the purchases amount is given to us as well as part of the trial balance, which is 10,649. And we will be deducting the purchases which are recorded in the wrong period, because as this purchase or these purchases are in relation to the next year, which is 265. And of course, we'll be deducting the closing inventory, So this is given to you as part of the further information. The first bullet point, which is the inventories at the close of the business on 31st of March 2014, cost 4187. And this will give you cost of sales. So we have calculated cost of sales, so we can record that here. And then we can work out working two, and the working two is administrative expenses. So again, 3 zeros at the top. And the admin expenses amount is given to us as part of the trial balance, first of all. So this should be always your starting point. So 3079. And this will be known as, you can write as per trial balance. Now, in relation to this, we have an adjustment. So you can see the allowance for doubtful debts receivable is to be maintained at 2% of the trade receivable. Now, please try to understand this point clearly. Now, the one which we make an adjustment in the statement of comprehensive income or statement of profit or loss is the adjustment in allowance for doubtful debt. So allowance for doubtful debts, adjustment. Now, what do we mean by this adjustment? This adjustment means that you will be comparing your allowance for doubtful debt, new allowance for doubtful debt, with the allowance for doubtful debt given to you as part of the trial balance. So the new allowance for doubtful debt we will be calculating as part of the trade receivables. So remember, they said is 2% of the trade receivables. So the trade receivable amount is given to you, which is 3100, and times by 2%. So whatever that amount will be, minus the allowance for doubtful debt given to you as part of the trial balance, which is 37. So this is basically, this is increase in allowance for doubtful debts. So if it is increase, we add it. If it is decrease, we deduct it. So as you can clearly see that 2% of 3100, which I can just calculate somewhere here. $62. So in other words, 62 minus 37. Which gives you 25. So if you add these two together, this will give you the amount of the admin expenses, which is 3104. So we can write that here as well. Okay, and then working three, which is finance cost. Again, you will be starting with as per trial balance. So the finance cost, as per trial balance, you've been told that they need to pay interest. So interest paid is given to you. But if you look at the information in relation to this point, you can see that they told us the interest on non-current loan has been paid for 6 months of the year. No adjustment has been made for the interest due for the final 6 months. Now, remember that what we include here as part of the statement of comprehensive income, we include the annual amount. So if they've given you the for 6 months, which is 58, so that means another 58 for another 6 months. Okay, so we can call that as interest accrued. So it was due, but it has not been paid. So in total, the finance cost, annual finance cost will be, if you add those two together. So of course, we got that amount as well. So which is 116. So now we have completed the step 3, which is we completed the workings and the items with the adjustment. So all we have to do is revenue minus cost of sales gives us gross profit. There's no other income in this question. So what we can do, gross profit minus distribution costs minus admin expenses, which gives you profit from operations. And then profit from operations minus finance cost, it gives us profit before tax. And then profit before tax minus tax gives us profit for the year. But this is not a complete statement of comprehensive income. This is the statement of profit or loss part of statement of comprehensive income. Because remember, as per IAS 1, statement of comprehensive income is the companies have two options basically. One is that they can just prepare one statement of comprehensive income. So as part of it, you will see statement of profit or loss and then statement of comprehensive income, the last part of this statement. Or what companies can do, they can prepare two statements, one statement of profit or loss and another one, which is statement of comprehensive income. So this part will be other comprehensive income. This part is in relation to statement of comprehensive income. And other comprehensive income, we can clearly see that in this case, it will be revaluation surplus. And this revaluation surplus is the difference between fair value of the asset, non-current asset, minus carrying amount. Okay, so if you look into that, this is just second bullet point there. So it says the land has been revalued by professional values at 3.5 million. The revaluation is to be included in the financial statement. So that's what we need to do. So the revalued amount of the land is 3.5 million minus carrying amount. In other words, cost of the land is given to us as part of the statement of profit or loss, which is 2075. So the difference between these two will be over other comprehensive income. So 3.5 million minus 2075, that gives us 1425. And this will give us total comprehensive income for the year. So which is simply profit for the year plus revaluation surplus 3284. Thank you very much for listening. I'll be back with the statement of financial position of the same question. So please watch out for that video. So bye for now.